This is a little podcast series we're going to be doing between myself and Fraser. My name is Stephanie. I'm Fraser's daughter, and I've worked at the tax mechanic now for a couple of years in various departments. But I've mostly been helping or learning with my dad a little bit more about the Canadian tax system. And we were talking a little bit earlier about how the Canadian tax system is a little bit confusing, particularly when it comes to marginal tax rates. So we're going to try and clear some stuff up today. Do you want to start by introducing yourself?
Okay, I'm Fraser Simpson. I'm Stephanie's father and a tax mechanic. We've got up on the screen right now, Ernst & Young. You can go to their website and call up the federal rates, provincial rates for 2020. So if you see, you've got a list of 14 rows here, which is basically 14 tax brackets. So when you look at your taxable income, you go from lower income to upper limit. From 0 to 13,000, your basic tax is 0, and you can see the tax that you would pay as you graduate to the higher tax brackets. All the way up to over 220,000, you'd be paying a top rate of 53.53%. Now, the rate on the excess here in Ontario, that's combined federal and provincial. So your total rate is 53.53%, meaning that for every dollar you make in excess of $220,000, you're going to be paying 53.53% on those dollars. So now the marginal rates on other types of income, you've got eligible dividend income. Those are Canadian dividends. It shows you the rates that you're paying there. You pay less on that investment income. And then other dividend income, you pay a little bit more if you're investing outside of the country. Then you get to capital gains. Capital gains is basically you're paying tax, just a regular income tax rates, but on 50% of the amount. So they basically just cut this here, making it a little bit more confusing for you, because otherwise it wouldn't be easy to publish. So you take 53%, you divide it by 2, you get your 26%. So if you make a capital gain, that's what you're going to pay, 26%. And anything over 220 is going to be 53.53. But to make things a little bit more simpler for, say, younger people are just starting to do your tax returns, you can go to TurboTax's tax calculator for 2020, and they're by Intuit, which happens, they're the biggest tax preparer, software preparer in Canada. In fact, I use their professional version called Profile. So this is for if you wanted to spend, I don't know what it costs now, like $40 or something, you can do this and do your own taxes online. But before you do that, you could actually calculate roughly what you're going to pay. So you can see up here, I threw in 15,000 for employment income. Roughly, if you had your taxes deducted at source accurately and with all your other credits, you would basically get a refund of $1,400. Now you can at the different levels, put this up to 50,000 and calculate. Roughly, it's going to be, I'm going to have to owe $7,244. And you can do that for the various levels and then go up over 220,000 or say 2.2 million, just for fun. And so you're roughly going to spend half your money on tax. So you can get an idea here. You can educate yourself, roughly get an idea of what you're going to pay, get an idea of the rates. You shouldn't really be focused too much on trying to understand everything about it because it can get complicated. Roughly know what you're going to spend. You know that, up to about 15, 20,000, you're not going to pay any tax. And then beyond that, it's not going to be that much until you get over 100 grand. So you don't have to worry too much about it until you get to that level. Now, when you're preparing your tax, you can go, like I said, you can go online here at TurboTax. They're great. And if you wanted to get it done professionally, you can come to somebody like us for a simple return. We charge for $150, but you get our whole ecosystem and, you can ask us questions and you get more support that way. But TurboTax is really fine for a beginner.
I think that was a really good overview of taxes in Canada. I want to back up a little bit just for, the layman like me who don't really know a lot about taxes. I think you're right. I think this TurboTax resource is really good for, people who don't really know what to expect in general for their taxes. This is a great way just to estimate kind of what you're going to be owing. But of course, there's a lot of other factors that play into how much tax you're going to owe, which isn't really included in this, which is why you'd probably want to buy a service, either TurboTax or go to a professional like yourself. If you could go back to the Ernst & Young page, I think that's also a really good resource to look at, what exactly your tax rate is going to be generally. What I want to say is, for people who are new to how taxes work in Canada, this is the combined federal and provincial income tax rates, as it says at the top there. So how it works in Canada is that you pay separate tax to the federal government and to the provincial government. Every Canadian, or everyone who has to pay taxes in Canada, is going to pay the same federal rate for each tax bracket, but the provincial rate will vary province to province. So this right here is just in Ontario, but if you lived in, say, British Columbia or Alberta, it's probably going to be a little bit different. The way that this works as well is for the marginal tax brackets, which you can see on the left there under taxable income. The important thing to note is that it doesn't mean that if you, say, for example, are paying or making $100,000 a year, that you're going to have to pay 43.41% on the entire 100,000. The way that the marginal tax rates work in Canada is that, say you make 100,000, the first $13,000 of that income, you're going to pay nothing. And then on the $13,000 to $15,000 income, you're going to pay 15%. So you're only paying that tax percentage on that portion of your income, but it is not on your total income. So if you graduate from, say, making $100,000 a year to $160,000 a year, you're not going to be paying that higher rate on your entire income, only on that increased portion of income that is now in a higher tax rate. I think that's a really important thing for people to know, because especially for me, I was under the impression that, if you are making $149,000 a year and you get a bonus that you're now making $151,000 a year, that, somehow that means that you're going to end up losing on money because you're paying a higher tax rate. But that's not true. It only means that you're going to be paying a higher amount on that extra couple $1,000s of income. So I think that's really important to know. What else do you think is important to know for Canadians who are filing and perhaps don't really understand how the system works?
Well, there's a number of credits, obviously, that are available to everybody, and those are that's where you need experience and to make sure that you get all your credits, because it doesn't actually pop up in the software that, for example, you can deduct your accounting fees to prepare your taxes. There's a different slot for that. So there's a number of things like that. If you're doing self-employed, so even as a student, a lot of students are, venturing out, a lot of entrepreneurs out there now and doing a side hustle here and there. So there's, a lot to know about how to properly set that up and to find out, what deductions are available. So there's credits, deductions.
Could you go back to the TurboTax page?
Yeah.
So you were mentioning self-employed income. So I noticed here that in the resource, there's a separate category for employment income and for self-employment income. Could you explain what the difference between those kinds of income are and what the implications are for taxes?
Well, the employment income is when you work for a company and they give you a T4. So when they pay you, they deduct the tax, CPP, and EI out of every paycheck. And that's, then you reconcile that basically at the end of the year. So now self-employment income is, say you're doing computer repairs and you work for a number of companies and you build websites or something like that. So you would invoice them, but you don't pay tax on that income until the end of the year when you file your tax. Mm-hmm. So that's where people can get into trouble, because now at the end of the year, all of a sudden they've got, say, 50 grand in self-employment income, but they haven't deducted any tax. They're going to have to pay like $20,000 in tax, big tax bill. And they don't realize that till the end. So that's why it's important when you're doing self-employment, or, that you set it up properly and you separate a certain amount out of every time that you invoice somebody, so you have that money available to pay your tax at the end of the year.
You also mentioned earlier credits. Could you explain what credits and deductions are?
Deductions are deducted from income before you calculate your tax. So say you have income of, say, 50,000, then you would get deductions for, the tax that you paid, the CPP that was deducted from your paycheck, EI, and then you may get deductions for accounting fees for preparing your tax return. You may get deductions for auto, and other expenses that you incur for your employment, which requires a T2200. So there's a number of things you can reduce your income by, and then you calculate your tax based on that reduced income. A credit, on the other hand, is after you calculate your tax, there's some credits available that basically are a function of what tax bracket you're in. So the working tax benefit is a very important one that, you get a credit for if you're working and you're within a certain lower income, you actually get a credit for working tax benefit to bump it up a little bit and make it a little bit easier for you. So you get income tax reduced by that credit.
Okay, I think that's a really good way of explaining it. So deductions are basically deducting your income before the tax is calculated, right? And then credits are calculated afterwards?
Correct.
Okay, that's really interesting. Is there anything else that those who are either self-employed or working for an employer should know about filing taxes?
Well, if you're, working for an employer, you've got some employment expenses you could deduct. So you have to, get a T2200 from your employer and say, hey, especially now with the COVID and working remotely and that, you want to get that in place because it shows that you are required to work from home. And then if you're required to work from home, you're allowed to deduct those expenses. So, but you need that T2200. That's for if you're working for an employer. If you're working for yourself, your bookkeeping has to be just impeccable. You have to keep track of everything, your meals and entertainment, your auto, you have to make sure you have an auto log. There's a checklist of a number of things that you have to do in order to make sure that you come up with the right amount. That's where a professional can help you.
The point that you were mentioning about working from home. So at the time of this podcast, it's just 2021. Tax season is approaching very quickly. And I know that COVID will probably have a lot of implications for people's finances this year. And in particular, I've been hearing a lot about, being able to take advantage of the tax. I don't know if it's a credit or deduction for working from home. Can you explain how that works?
Yeah, there's a $400 deduction that you don't have to come up with your any calculations or anything. They'll just give it to you. But I'd really look at that seriously because, if you did your home office expense, it's almost certainly going to come out to more than that. So I think you're doing yourself a disservice by taking that. That deductions basically should be called home office expense deduction for lazy people.
So are you saying that if you don't take that, then it's possible that you'd be saving more money otherwise?
Almost certainly.
Okay. Is COVID going to change taxes, the tax situation for people this year at all, besides the work from home credit?
For sure. It's what's deductible is going to be kind of in question now. A lot of expenses, when you think about it, masks, for example, deductible for sure.
Right.
And things that you put in place at home, maybe plexiglass screens or doors or, access to a different entrance into the house, separating the garage because you got to keep things personal distance and everything. So there's anything incurred to keep yourself safe for the business is deductible.
So I guess that this year people are going to be able to deduct a lot more related to all of their COVID precautions that they've needed to take for work, right?
Absolutely, but keep in mind they're incurring those expenses,
Mm-hmm.
right? So
yeah,
they should be able to, and they're not getting further ahead. They're actually behind, right?
Mm-hmm.
But you're going to be really behind if you're not deducting them.
So I guess the last question I want to ask is, we're looking at this TurboTax resource here. I know that TurboTax has some software to help people file their taxes. When should people use an easy resource like TurboTax to file their taxes? And when should someone come to someone like you who's a professional to do their taxes?
Well, I think you can come to a professional anytime, but if you have a simple return and you don't mind spending some time and educating yourself, you could do it online using TurboTax. So that's the difference. You're basically, but when you think about it, you go to TurboTax spending $50 for the software. It takes you a couple of hours to figure out how to do it. Or you could spend $150 going to a professional who does them, 50 a day, right? So to me, it doesn't it's just like your mechanic for your car. I mean, you can change your tire if you want, or you can just take it to Canadian Tire and say, give me 4 new tires.
Yeah, the analogy that I was going to use is that of dentistry. You can learn how to whiten your teeth at home. You can learn a little bit about dentistry at home. But when it comes down to it, if you really want to fill a cavity, you should probably go to a dentist that knows how to do it. There's a reason why dentists exist and have to go through years of medical school in order to do it. And the same reason why, accountants have to go through years of school to learn taxes is because, when it comes to the simple stuff, perhaps you could learn it, but at a certain point, it becomes too complicated that you should probably just pay someone who's gone through the education and has the experience and knows how to do it.
Yeah, I agree. And but listen, if you got a simple return, you can do this for a few years, and you'll be fine with this. TurboTax is very good.
All right. Any final notes?
No, just my final thing would be, remember the CERB benefits are taxable. So, don't, everybody's in for a bit of a shock, I think, when they come to do their returns. They think, I'm sure most people didn't keep that money aside. But other than that, if you got any questions, you can, reach me on Facebook or Instagram anytime.
Great. All right. Thanks for watching.
Great. Thank you.